Okay, so now that the second and third largest bank failures ever in the history of the United States, SVB, Silicon Valley Bank, and Signature Bank have already happened here in the last 30 days. Well, now some other banks are coming in to acquire the assets of this. First Citizens Bank's acquiring Silicon Valley Bank at a massive, massive discount here. Will other banks be failing here? Take a listen to this and look at how much of a discount they got this at. Take a listen.
Valley Bank for $16.5 billion, according to the FDIC. Those 17 branches of SVB will reopen. They'll be known as, I believe, SVB by First Citizens, and all SVB depositors are going to become First Citizens clients and customers. Prior to this deal, First Citizens had $109 billion in assets and total deposits of around $98 billion. It was the 30th largest bank in the U.S., and obviously it moves up that list now with this deal.
Yeah, pretty instantly. I'm surprised they didn't go with SVB, a First Citizens brand or something like that. But at the end of the day, I think the type of transaction that we're seeing here, it's expected to minimize some of the disruptions for loan customers. That's a good news there. And then the FDIC also estimating that the failure as SVB to their deposit insurance fund, they're expecting that to be approximately $20 billion. I'm tracking a lot of the regional banks here, even in pre-market, the moves significantly higher across the board, plus some additional news around KeyCorp, which you had flagged earlier today as well. And so all of that considered, the regional banks in these extended hours, PacWest even, moving higher by about 10% right now.
Well, and First Citizens itself is up 55% today, and that's because it is getting a lot bigger, and so that is being reflected in the stock price. There were some questions about its ability, this company's ability to take on, because it's 30th largest, right? SVB was something like 16th largest before its collapse, and so there were some questions about its ability to digest these assets and take control of these assets. It's actually made a little bit of a specialty of buying failed banks, right? We should point out to our viewers, SVB, Signature, these are not the first banks to collapse, right? You tend to see on an annual basis a handful of banks that don't make it. They're just not usually very large. Well, First Citizens is one of these banks that has come in and snapped up some of those smaller banks when they have gone under.
Right, and there's a lot for investors to be rewarding and to be happy about, and that's, of course, factored into this pre-market move that you were mentioning, but it was really the size of and the scale of the collapse of Silicon Valley Bank, which, and of course, all of the other kind of tertiary or secondary even impacts that came along with that really caught the attention of the broader banking sector, ensued much of this turmoil and concern, because then it was a larger thought of, okay, if Silicon Valley Bank is exposed to this and there have been such missteps on their front for activities that are quite typical at some banks, but they had so much exposure, and that ran synonymous with some of the other banks that started to collapse thereafter even.
Yeah, so the question here is, look at what happened here in the 2008-2009 financial crisis here. Look at how many banks failed then. Now, are we going to start seeing a new financial crisis here now? We've already seen the second and third largest banks ever fail. The first largest bank ever to fail was back then. Are we going to see a new one now? As we're starting to see multiple banks fail already, will 2023 see a new climb like this with massive bank failures? You could see back in 2018, 2019, 2010, or I'm sorry, 2008, 2009, 2010. Yeah. There was over 100 banks that failed each year back then. Okay. So is this going to happen again? And the size of banks now, as opposed to back then, 10 plus years ago, these banks are much, much larger. And remember, the whole entire financial system almost collapsed back then. Yeah, and Treasury Secretary Janet Yellen says that they're not considering blanket insurance for all U.S. bank deposits. She said here a few days ago, Treasury Secretary Janet Yellen told lawmakers that she has not considered or discussed blanket insurance to U.S. banking deposits without approval by Congress as a way to stem turmoil caused by two major bank failures already this month. Her comments came before a Senate Appropriations Subcommittee hearing dashed industry hopes for a quick government guarantee to stem the threat of further bank runs and contributed to a 15.5% fall in the shares of struggling First Republic Bank here last week. So you can see here there's multiple banks here on the verge of this. Some banking groups have urged the Biden administration and the FDIC to temporarily guarantee all U.S. bank deposits, a move they say will help quell a crisis of confidence after the failure of Silicon Valley Bank and Signature Bank. But the Treasury Department, the FDIC, and the Biden administration have stopped short of saying they will guarantee all deposits and all banks. They just simply said we cannot do it at this point. So this is where everybody is a little bit shaky and a little bit unsecure. And then remember, if you've seen my previous video, we also have panic around Deutsche Bank being the next Credit Suisse, which the fall of the 167-year-old Credit Suisse has also thrown the European banking world in crisis. As just a few days ago here as well, Credit Suisse, one of the world's largest banks, also collapsed. You can see here on one of the front pages of Forbes here, Credit Suisse collapse, a cautionary tale of returning to the office. Credit Suisse was also worth over $500 billion. Now this is a worldwide bank. For comparison, SVB was worth over $200 billion. Yeah, you can see here Credit Suisse is a global investment bank and financial services founded and based in Switzerland. Total assets $531 billion in 2022 with over 50,000 employees. Yeah, so when they talk about global contagion, this is what they're talking about. Multiple banks, not just here in the US. This is a nationwide, a worldwide problem. Deutsche Bank is 3 times the size of Credit Suisse, and Deutsche Bank is worth over $1.5 trillion in assets. One of literally the world's largest banks, $1.5 trillion in assets. So yeah, this could be an economic meltdown. So is your money safe? Is any money safe around the world right now? Because these banks don't have trillions of dollars ready to just hand out. It's invested. It's in mortgages. It's in stocks. It's in bonds. It's in securities. It's in derivatives. It's in who knows where. It's in treasuries. It's in U.S. government bonds. It's in other government bonds around the world. It's not all liquid. So who knows what will happen here. Yeah, I'll keep you up to date here, though. If you haven't yet, make sure to subscribe down below to our YouTube channel. It's free. Thankfully, it's the best price you can get here. So make sure to subscribe, click the bell icon so you don't miss out on new videos that come out here on our channel every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. And don't forget to hit the like button for us if you appreciate these videos. Here's some new videos you can watch next. Here's what just happened to low and middle income Americans. Pretty shocking news here, and you can click here to watch my newest video next. So click on one of those videos. Thanks for watching, guys, and I'll see you in the next video.